The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. And we are live at Commodity Classic 2025 in Denver, Colorado, here for Market Talk. Thanks for joining us today. Jesse Allen with you as we are on the trade show floor with our friends at agmarket.net. Obviously, there has been a lot of headline risk at play in the markets here the last couple of, the last 24 to 48 hours, I guess I would say. Maybe even some last week, but it's been the talk of the trade show floor on Tuesday. And we're going to dive in and get some perspective on all this. Joining us for market analysis, Corey Bratlin with agmarket.net. Corey, it's good to see you, buddy. How are you?
Jesse, doing great. Good to see you.
Tyler Schau with agmarket.net here as we have a bit of a roundtable discussion. Tyler, good to see you as well. You were well dressed today.
Thank you.
A lot better than I am. I applaud that. I applaud that very well. I got to get a blue blazer like that, honestly. All right, guys. Getting down to business here. As I mentioned, tariffs. I mean, that's the talk of everything going on here on the trade show floor on the final day of commodity. I've heard so many people reacting to it. Some folks don't know how to react to all of this. Tyler, I'll let you start. I mean, 25% tariffs to Canada and Mexico, another 10 on China to make it 20%. I mean, that right there is what we know. There's some unknown about this new April 2nd deadline that President Trump's talked about. I mean, your reaction, obviously markets feeling the pain on Tuesday.
Yeah, they are. You know, the problem, or I should say the hesitancy for a lot of people to take a position ahead of the last few days, even though, I mean, you can look back on it now and say, we knew this was coming, he said it was going to happen, was the same thing occurred a month ago when we were at our conference in Nashville. And on Friday, that was the talk. We came in Monday, we're going to see these tariffs placed on Canada and Mexico. And as early as Monday morning, that was still the talk. Markets were down hard, and midday, all of a sudden, we found out, hey, they're going to delay them a month. And there was kind of some speculation that we would see the same thing. They'd come out here, say, okay, we Canada and Mexico have been making some headway on some talks, and we're getting some negotiations in. And this April 2nd deadline was coming up, and I think there was a large part of the market thought it was going to get kicked down the road one more month again, and it didn't. And so, it's easy to say, wow, we saw this coming, why didn't we do anything? But at the same time, fool me once, shame on you, fool me twice, shame on me, kind of thing.
Well, Corey, your perspective here, and I mean, I'll throw the caveat out here too that we've lost, some 40, 50 cents in corn, for instance, in the last week, the end of the month into the beginning of the month. So, I mean, this is real dollars and cents coming off the table here with all of this headline risk.
Yeah. No, the sell-off in the corn, we're down 9 out of the last 10 days. It's at 70, 80 cents here on the nearby corn. You talk about 25% tariffs. We just lost 20% of our price in corn, or getting close, losing close to 80 cents. So, it's an eye-opener here for sure. So, yeah, I mean, the overall, I think a lot of us were kind of optimistic that the can was going to kick down the road. I think at the end of last week, we thought maybe the selling was it's month end. The funds are selling to kind of shore up the positions like they do a lot of times to come into month end. But then Monday when we come in, or Sunday night with the tariffs were going to take place, and then we had kind of the on again, off again story. I think people kind of thought there'd be a little optimism in here, and that didn't happen. So now here we are. I think there's a fear trade is kind of happening where money flow is just coming out of these commodities and going to the sidelines. They're just going to kind of weather out this storm here a little bit and see what the next 30, 60 days plays out.
Well, and to that point, money coming out of commodities, Tyler, funds, especially corn, they have been getting out of these long positions to a pretty sizable amount. And I think last week it was some 28,000, and I'm guessing it's more than that maybe as of this past Tuesday.
Yeah, we're going to see that revised quite a bit lower, I'm guessing, when we get to traders on Friday. The one, if you want to look for a silver lining in all of this, is the fact that we still have all of our North American weather premium now that's been sucked out of this market in the last 2 weeks. You've got the second crop corn in South America that you've taken all that weather premium out of. On top of that, you've got some of the lowest global ending stocks we've seen in corn in quite a few years. So I'm not going to go out and tell anyone, you should be buying corn right now today. But there is a silver lining. We took a lot off in a short amount of time. I'm not going to say it's coming back in the next 2 weeks, but like I said, we've got some weather concerns laying out in front of us right now, and an entire growing season ahead of us.
And that's, I want to get to some of those fundamentals here in a little bit, but think about soybeans here too. Obviously, I've talked with both of you about this separately, that cost-price ratio between corn and beans and that acreage conversation, and everyone's saying, oh, we're putting corn in, but now does the tariffs, does all of this pullback, does this change the conversation? What do you think, Corey?
And my feeling is the corn acres are still going to be pretty strong.
Okay.
There might be a few last few acres that might are kind of that up in the air what they're going to do. I think those are still going to be a question, but I don't believe the soybeans are still buying these acres back. I think corn still has those locked in and solidified in here in the short term. Even though I look at beans, we've priced in already a very large South American crop. We've already priced in that negativity. So this is just kind of more money flow of this sell-off in here. But no, I look for the corn acres to be very high. Bean acres are still going to struggle. The guys we talked to down here at the show and even back home, we need to get $11 plus for these guys to break even. Corn, we're way off the highs. There's still that optimism that, like Tyler just said, we took out all the weather premium out of this market. So there's still have that upside potential in that corn.
Obviously, thinking about the acreage battle, I would be remiss if I didn't bring up wheat. Tyler, you're in North Dakota, spring wheat. I mean, does it change the conversation maybe regionally for some folks? I'll ask you that.
I'm kind of with Corey. I don't think you're going to see a lot of change with this recent dip in markets. Where I'm at, I've got a guy locally that sells seed, quite a bit of seed, and he told me as of 2 weeks ago he still hadn't sold a unit of soybean seed at that time of the year. So a lot of acre shift. One of the other things, we got a lot of specialty crops, so there's going to be a lot of lentils go in. Sunflowers got a pretty good bid on them for the cash contract for new crop sunflowers, so there's a lot of guys kind of leaning towards that. And then the other thought I had was what you guys were talking is the insurance prices were set as of last week, and corn for new crop corn is actually higher than last year's price, and beans are something like $1.10 lower, I think.
Yep.
So farmer's doing his crop insurance planning right now. That he's going to stare that in the face, and like Corey said, you got to be near $11 on new crop beans to pencil out even a small profit.
And I just talked to Caleb Braglin, the president of the American Soybean Association, earlier this morning, and we were talking about crop insurance price. And I believe it was $4.70 corn, and I want to say it was $10.53 on beans. Yep. So to your point right there, that's you're talking 50 cents off that $11 break even.
Mm-hmm. Well, that talk about preventive planting. Guys, if we're a long ways from that, but guys are going to use that as a decision maker as to that preventive plant on corn acres is going to put a lot more pay back a little bit better than preventive plant on soybeans. So I would guess that's going to weigh heavy on this market, and just I don't foresee this idea of higher corn acres slowing down any over the next few weeks.
We're talking with Tyler Schau and Corey Bratland from agmarket.net here live on the trade show floor, Commodity Classic in Denver, Colorado, for today's market talk. Let's talk about some of the other fundamentals and some risk management thoughts here. Corey, I'll come to you on this. You both mentioned the weather, and we obviously have to keep that in mind here. It's been pretty dry in many parts of the U.S. It's getting into spring planting time frame. South America has had their challenges, but is mostly, I'll say, improved and caught up, etc. So we got that big soybean harvest coming on board. Safrinha corn's getting in the ground. So when you look at the weather fundamental in this market, I mean, how are things looking in your view, and how that could impact this market trade here in the short run?
Yeah, every spring when we go into markets, we always like to build some weather premium in the market for that what-if scenario. So we got to get corn prices, bean prices up high enough so that way if we do have some bad weather events come in, we built in this premium. We took that all out, and I think going into this spring, we are very, very dry in a big portion of the U.S. When we talk with a lot of weather folks, a lot of people talk to a lot of other weather firms around the countryside, they're all pretty much somewhat in agreement that we've got a better than 50-50 chance of possibly having a drought this spring, and that makes everybody nervous. We don't have that reservoir underneath of the soil, subsoil moisture. So I think for those that are on risk management, if you've got some sales on, it's not a bad idea to consider having some out-of-the-money call options right now just to protect against those.
Mm-hmm. Your thoughts on the weather side of that? To Corey's point there, I mean, there's tools in the toolbox to manage risk here, and maybe you've already done some of that, but if you haven't, I mean, you got some decisions to make, right, Tyler?
Yeah, well, I mean, he hit the nail on the head. If you made some sales over the last few weeks, early February, and you were looking for an opportunity to re-own it, here's a really good opportunity to buy some pretty cheap calls, probably up around where you got that grain sold and you got your hedge insulated if this thing does go run higher, or if you made some cash sales of that nature where you're going to have to deliver some. So that's a great idea. The other thing, we got the quote sitting in the background there, and it sticks out to me. We've knocked 70 cents off May corn, but and I'm not saying 25 cents isn't a big deal, but we've only taken the D's corn down 25 cents. So sometimes you can kind of get caught up in the euphoria or the hystericalness of this market, and we've lost 70 cents over the last 2 weeks, and woe is me. But I mean, it wasn't all that long ago guys were clamoring to be able to sell 445 new crop corn. So there are plenty of options, and I mean, we were just showing some new brokers here a little bit ago, all the weekly options on new crop corn,
yes,
and now daily options out there. So there's a lot of ways that you can hedge that risk and buy yourself a little bit of time to get through some of these other reports, the planting intention report coming up at the end of the month, and get into planting season, and then you can kind of start making some long-term hedging plans as we get into that season.
You made me think of something. I've had this discussion with a couple of folks in the last week that volatility can create opportunity in these markets. I mean, you guys' perspective on that, Corey, if you want to take that, I mean, talk about that aspect.
Right, volatility. I was just talking with a person in our booth here earlier today, and we were talking about how the big sell-off. We took the stairs up, which in our industry, we take the stairs up and we take the elevator down, and that's exactly what happened. But I pointed out to him, it says there's opportunity in there. The market gave us opportunity to make some sales on the way up. Now we get this big correction. Now we have some opportunity to re-own those bushels and protect for another potential run-up. And, I don't know when we bottom this thing out. Is it today? Is it next week? Is it next month? Somewhere in here we will eventually find that bottom. And we will probably go back and probably try to price in some more weather premium back in this market. We usually do. This was, like Tyler just said, we took 70 plus cents off the old crop. To me, that is money flow coming out more than anything. Okay, it's people are nervous because what the market doesn't like is the unknown, and that's what we have a lot of right now. So volatility is ramped up here a little bit, and we're seeing it.
Very true. Your thoughts on volatility creating opportunity, Tyler?
I 100% agree with everything Corey said, and it does. The key is you've got to be willing to take action, and that's probably the biggest roadblock that I run into with my customers is they like the idea, they think about the idea, and that's where we always come back. Have the order work, and if you think you'd like to re-own some corn down here, pick if it's a call option, pick a strike price, pick a premium you're willing to pay, put the order in. But if it's not working, and the other thing to throw at this, if you look at that chart, it looks pretty ugly. But I've seen a same scenario where it rallies back 20 or 30 cents, baits guys into finally buying in, and then it levels off again. So, you kind of got to pick that spot where you're willing to risk it. I don't want to throw shade at anything, but trying to find the technical bottom in this is going to be difficult.
Yeah.
I mean, a lot of guys have tried over the last 2 weeks, and it ain't worked yet. So.
If we could all call the top at the bottom, we'd all be billionaires. You can't do it. What other questions have you heard from producers here at the show this week as we're navigating all this volatility and uncertainty? I mean, have we kind of covered a lot of what you've heard from folks, or have there been other things you've heard, Corey?
Yeah, we covered pretty much everything what's on everybody's mind. But that's the easiest thing is why are the markets still going down, or when is it going to end? That's probably the biggest question and so on. So, but no, I think people they can't lose the sight of, we got to also look out further ahead, in the next couple of years as well. So, like I said, still 450 corn, 445, 450 December corn. In my book, if you got a bin space and you can carry that and pick up, 15-cent carry out to March, let that basis narrow up. For most of us, we're still profitable there.
Your thoughts? Anything else you've heard from folks?
I've got a lot of questions on the macro economy, the equity markets, and they're facing the exact same issue we're facing in the commodity markets. A ton of uncertainty. You can talk to one macro economist who sees some bullish points. You can talk to another that's going to see a lot of bearish points. I don't know that I have any more of a clear picture after visiting with Stop and Fit today than I did 2 days ago, to be 100% honest with you. I think you're going to see the same thing, that volatility driving that thing down, pushing it higher. I'm just looking now, fat cattle are up $2.40 when they were down $2 and some odd cents earlier this morning. So, a lot of stuff at play. Cards are going to be flying all over the place.
Well, and you brought up cattle. We should touch on some livestock here. I know we're at a convention that's mainly with grain producers, but a lot of them are also cattle and hog producers too. That volatility, again, just seems like it's been at play in the cattle and the hog markets here. Corey, your thoughts on the proteins?
Yeah, the proteins, especially cattle, with China imposing tariffs on the U.S. here now, that hits home here with our beef producers, because we do export a fair amount of livestock or cattle to China. We haven't heard any retaliation tariffs yet on Mexico. They buy a lot of pork. I don't know if it's going to be a big issue or not. I just think they probably buy those hams in the pork from us. But it's up in the air. We don't know, and that could cause that next wave of selling down potentially. But seeing cattle here stabilize and bounce back is very, very encouraging.
Your thoughts, Tyler? You keep a pretty good pulse on the cash markets and the plains and what's going on there. Your perspective on the cattle and hog markets right now.
Well, it's been a little confusing because the cash market has been strong, and it has not backed off. I was on the phone this morning with a couple of cattle buyers up in our neck of the woods. They said they didn't get any cheaper up here. I looked at some sales in Oklahoma from yesterday. They were pretty steady. The index was down. We think it's going to be down probably a little bit again today. That March has got to settle up with that index here at the end of the month. But when I talk to my customers, I just continue to remind them there's volatility in all these markets, and cattle is the one where we're at, if not all-time highs, darn close. So the smart money says put some hedges on, do something to protect that downside, and if this thing does go higher, you're going to be okay. But we could knock a lot off that cattle market if this macro deal is scary.
Do something to be smart about your marketing. I think that's a good way for us to kind of close out. I'll get final thoughts from both of you. Anything you would mention, reiterate to folks here, just as they're trying to navigate all of this risk in the markets. Corey?
Yeah, I think this is a great reminder of the levels we were at and how quickly these markets can change on us, and things are if we were out here 3 weeks ago, it would have been a little bit better tone to the market. I should say not tune, but a tone to the market. But it's a very good vibe out here. That's one thing about the farmer. They're eternally optimistic and awesome people to work with. But this is a great reminder. Well, when we get a rally back up here, stay disciplined, take advantage of these markets, and get those hedges and get that management risk in place.
Absolutely. Tyler, final thoughts?
Yeah, I would echo that. We kind of hit on it. We know we'll get some type of crop scare as we move forward. Don't let those opportunities slip. Have a plan, have the orders in, execute the plan, and get through it.
And of course, you guys have a great team, agmarket.net. Folks can get more information, all of your intel, the app, etc. Definitely appreciate you guys letting me crash the booth here in Denver for a little bit and talk about markets, and we'll stay on top of things. Corey Bratley, good to see you, my friend. Thanks for joining us.
Thanks, Jeff.
Tyler Schau, again, looking dapper, buddy. Appreciate the time.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.